This is it, everyone. This is the final session for day one of Wild Digital Southeast Asia Conference 2021. And the topic is Unicorns Playground. Cue the My Little Pony music. Beyond the billion-dollar rainbow. The road to startup success is a long and arduous journey. For everyone that makes it big, there are countless other aspirants who fell short by the wayside. This session provides participants with the opportunity to learn from proven leaders who are at the helm of successful companies that have reached the billion-dollar benchmark. So get ready to listen in. Our speakers for this panel are Aaron Tan, co-founder and CEO of Carro, Danny Yeung, co-founder and group CEO of Prenetics, Rob Schimek, group CEO of bolttech, and Simon Martin, who is the moderator, managing editor of KrASIA. Everyone, the floor is now yours.
Thank you, everyone. Hi there, good afternoon, everyone. It is a great pleasure to be here today moderating another panel for Wild Digital SIA in its 2021 edition. My name is Simone Martin, and I'm a managing editor at KrASIA, a digital media company reporting on the most promising technology-driven businesses and trends around the world's emerging markets. Today, I'm very happy to be sharing this panel with three successful CEOs of unicorn companies. I have with me, I would like to welcome Aaron Tan, co-founder and CEO of Carro, Danny Yeung, co-founder and group CEO of Prenetics, and Rob Schimek, group CEO of bolttech. Thank you all very much for being here today. The name of this panel is Unicorns Playground, the billion-dollar rainbow, and we will be discussing a bit about what's the significance for startups to reach the ambitious unicorn status, and what does it mean to carry it, and well, what's next, right? So without further words, I would like to give the words to our speakers to introduce themselves better and tell us a short recap, just perhaps a couple of minutes each, about how their companies have reached a billion-dollar valuation in a short time. Maybe we can start with Aaron. Welcome,
sure.
Aaron.
Thanks. Thank you so much for having me this evening, I would say. My name is Aaron, founder and CEO of Carro, Southeast Asia's largest marketplace for cars, right? So the way we think about life as a company really is that we are providing customers a better experience to buy and sell cars, right? So, we think about ourselves really as Amazon.com for cars, right? And very, very simplistically, that's where we are right now as a company. I think, the company itself is spread across Indonesia, Thailand, Malaysia, Singapore. We have about 2,000 plus people now across 7 different geographies. Actually, right now I'm in China right this second. And for us, we managed to hit unicorn status in about 5 years, right? So the company was started for all intents and purposes somewhere about 2016. I think, since then, over the last year itself, we have grown pretty nicely. I think the Financial Times named us as the fastest growing company in APAC this year, in fact. So the long and short of this is that we have been able to do this in a relatively long to short period of time. I mean, I would say 5 years is about right? Coming from my previous life as a venture capitalist in that sense, but I think generically we have been quite lucky and blessed to have investors such as the Vision Fund and several other institutional investors that are sovereign funds in the regions and the shareholders. We look forward to a very fruitful discussion with Danny and Rob, as well as yourself, Simon, today. Simon, you might need to repeat yourself, is it?
Yes.
Yep.
Please.
Simon, I think you're breaking up.
Hello. Yes. Can you listen to me?
Yes. Now we can. Yeah. Please go for it.
All right. Sorry, probably some connection problems. All right. I would like to give the word now to Danny Yeung to continue.
Great. Thank you, Simone. Thanks for having me. My name is Danny Yeung, co-founder and group CEO of Prenetics. Prenetics, we started back in 2014 as a genetics testing company. So when we started out, very small operations. We had 7 people. Now, 7 years later, we have about roughly 700 people globally, with our main operations in the UK and in Hong Kong. So when we started out, as mentioned, we started out with doing genetic testing. So within the first, I would say 4 to 5 years, we actually did a lot of B2B work. In 2019, we started doing direct-to-consumer genetic testing with our Circle DNA product. And then, of course, the pandemic hit. So we are about a 200-person company before the pandemic. So certainly, we've been able to grow a lot due to the pandemic. And now we certainly have about 700 plus employees, right? So what we have been able to do we're able to actually pivot a lot of our operationals from DNA testing to actually doing COVID-19 testing from very early on in the pandemic in both Hong Kong and the UK. In Hong Kong wise, we work very closely with the Hong Kong government. We do a lot of the testing for the community, for all the airports in Hong Kong International, Heathrow, etc. We're also the company that helped restart the English Premier League season last May in terms of testing for all 20 clubs, players, media, and coaches on a weekly basis. So certainly we've been able to benefit a lot from it because we were able to move extremely fast when the opportunity came. So we reached unicorn status earlier this year, actually, when September 16th, when we made the announcement to merge with Adrian Chang's Artisan Acquisition Corp, which is a SPAC in the US. So that valued our organization at 1.25 billion, enterprise value with an equity value of approximately 1.7 billion. So that process is still ongoing. We expect to complete that process by the end of Q1 2022. So certainly it's been a quite crazy journey, but I think we're very excited that we have the opportunity to impact people's health. And when we think about the future, it's all about how do we bring health care closer to individuals without ever going to the clinic or hospital. So I think that gives you a short overview in terms of what we do.
Thank you very much, Danny, for that very short and very to the point introduction. And please, Rob, please, you can continue.
Hi, everyone. What a pleasure it is for me to be with you today. I'm Rob Schimek. You can tell from this accent, I'm from the US. I'm from Philadelphia, Pennsylvania, but I'm quite proudly today sitting in Singapore, the home of bolttech. So who is bolttech? bolttech is an international insurtech, and we've got the mission to build the world's leading technology-enabled ecosystem for protection and for insurance. And what that big mouthful really says is that we're a gateway to insurance, where what we do is we power connections between insurers, distributors, and customers using technology to make it easier to buy insurance and to sell insurance and to make it more cost effective. At the center of what we do is the largest insurance exchange that is technology enabled in the world. So we process $5 billion US of premiums through this platform on an annual basis. We are somewhat unique in that as a unicorn, we operate in 26 countries around the world. So you'll find insurtechs operating in a handful of countries, but rarely as many as we do. We're across 3 continents. Those 3 continents are North America, Europe, and Asia. And in particular here in Asia, you'll see us working with some great partners like super apps like Rabbit Line Pay in Thailand, maybe PayMaya in the Philippines, e-commerce giant like Lazada, and financial services companies, including, for example, Home Credit. And then you might even see us with electronics companies such as Samsung or LGU Plus, where we partner with in Korea. So basically, you should think of bolttech as a technology-led intermediary that focuses on making the power of connection work for distributors, customers, and insurers all in the same way.
Thank you, Rob. So to start, I would like to ask you like a question that it's when you started, when you decided to like found a company, was becoming a unicorn part of your goal or dreams for the beginning, or perhaps you were more focused on building your purpose, make it commercially viable, and grow from there? Because most of you have founded more than one company before being the leaders of your current unicorn firms. So should becoming a unicorn a goal in the mind of founders, or there are other important aspects to focus when starting a company? Anyone can feel free to take this first question.
Yeah, I can start. I mean, the long and short of this is that I think I can speak for the rest, which is I don't think any of us has started the company with the mind of that. Let's start with building a unicorn company in that sense, right? I think everybody can attest to that in that sense. I'll be happy to see what everybody else has to say on this. But I think for me, at least from our company, I always think of life as like, what is the problem we are trying to solve, right? In our case, in our industry, basically, we are trying to make buying and selling cars transparent. We're trying to make buying and selling cars online, super easy, as simple as us literally clicking on a button. And that's how we think about life in Carro itself. And I think generally, if you are in the company, in your market, solving a real problem for the consumers in a large sector, in large areas and sectors, in this case, in insurance, or in our case, could be like in automotive as an industry, or in EVs per se, you can be rest assured then as a result, you'll be rewarded by the market, right? And in this case, it could be a $1 billion mark as a unicorn, or even a decacorn in that sense, right? I think it still goes back to really solving a problem, finding the right pain point, making a business out of this, and that will naturally take care of your unicorn in that sense. And going back to this, I really don't think that any one of us really starts any of our companies here thinking that we want to be unicorn on day zero, and that's the reason why we start a company. The motivation is different.
Yeah, I think Danny, you would probably agree with the same thing that you said also, Aaron. My sense is we don't start with the question of how big can we get. We start first with the question of, can we really make a difference, and can I really provide a solution that benefits the masses? For sure, I can admit that I like the phrase of go big or go home. And so I do believe that we want to do this at scale. So I'm not just making a difference for one or two people in one or two locations, but without a doubt, it's really about providing the solution rather than doing it first and foremost at size.
Of course. And well, your companies operate in very different sectors, from e-commerce, fintech, medtech, insurtechs. What would you say has been like the most difficult part or moment in your successful business journey so far? Which are some key pain points you got past to get where you are right now? Maybe Danny?
Yeah, so there was a lot of key pain points, right? So when I went to healthcare back in 2014, I came from Groupon e-commerce, right? And then went to healthcare. So a lot of people said, yeah, what the hell you know about healthcare, right? Or DNA testing. So it's a very completely different field for me. And then going back to the earlier question, when we started out the company, again, it was very different industry. And I wanted to do something in healthcare because I felt there wasn't enough companies in this space making a difference. And then, of course, then you identify, okay, what is the problem that we're trying to solve? Like Aaron, at the time, I was thinking, okay, how can we utilize genetic testing to actually use it as a tool for preventive healthcare? And then, so certainly 12 months after, I was like, oh shit, I thought I actually made the wrong decision, right? Because I was like, I don't know what I'm doing, I'm learning through the ropes, and etc. So 12 months in, I actually was thinking about giving up, because I think for us as entrepreneurs, time is actually the biggest opportunity, is the opportunity cost, right? So business, the upside isn't worth it enough of the time, so it doesn't make it worthwhile, right? But after 12 months, then of course I thought about giving up, but then I said, you know what? Let's give it another 6 months or so, and if it doesn't really work, we don't get any traction, then I would do something else, right? And then, but luckily we're able to get some traction working with some of the insurance partners and them signing on board. But certainly it's been a journey, and you have to pivot, move with the market, and really understand your customers' needs, and ultimately understand what is your USP, right? Because ultimately you are as good as your product. Right. So if you don't have a good product, it doesn't matter who you have on your team, right? It doesn't work. So ultimately, first and foremost, you have to have a good product, and we have a good product, and then certainly then you have to get the customers.
Right. As your companies have quickly scaled, how have your daily operation changed whilst achieving like the $1 billion valuation?
Well, I'll say one thing for sure is that we've had to do a lot more work on prioritization. There are so many things we think we could do well, and so many places we think we can do it well, that it creates a great challenge. So I described for you earlier, we operate in 26 countries and 3 different continents, and we're quite proud to be a unicorn, quite proud to have raised a record amount in our Series A fundraise. With that said, we don't have unlimited funds. We don't have the ability to simply do everything. And so maybe more than anything, we've really had to continue to be relentlessly focused on prioritization. So that's the #1 point for me.
Right, because becoming a unicorn and carrying that unicorn tag brings more prestige, but also more pressure, right? It means that you need to keep raising large amounts of capital, grow quickly, satisfy a lot of benchmark and metrics set by investors. So how do you deal with that like every day? And how do you manage balance between optimizing revenues, growth, and profitability? Maybe Aaron?
Oh, that's a question that we I was just having this call with the CEO of Auto One a few days ago, one of the largest guys in our category, and Christian always jokes about this, and Christian said, the issue with our business is that every single month our counter restarts, right? Literally every single month. I think the same for maybe less for Rob and for Danny, but for myself definitely, right? It's every single month our number of cars that we sold in that month restarts itself. So literally we think of life that way, right? But I actually think that there is a balance in terms of growth and valuation, and for that matter, in the stage of the company, depending on where you are in life. Let me just elaborate a little bit, right? What I mean by that is that you see, as a company that is, in our case, we are not public or not yet public as a company. So, but we definitely have public ambitions, right? In that sense. So the question then is that, okay, what is a right multiple to grow at in that sense, right? And personally, I feel that sometimes if you grow too fast, too quickly, you are setting yourself up for failure, right? So there's a balance in that sense. As a private company, I think that it's not too hard to ask year-on-year growth of somewhere north of 200 to 300% year-on-year. That's why I feel is probably relevant and stuff and whatnot. And then if you can carry this towards, say, an IPO stage of sorts, going again to somewhere 200-300% would be great. Once you're public, a year-on-year growth of about 200% probably will suffice a lot of the market expectations and stuff and whatnot. So coming back to what I just said earlier on, I think there is a balance in that. It is not something that you should grow at all costs, because when you do that, that basically sets yourself up for failure. I always call this internally to my shareholders, to my board, and I think everybody knows this, which is we have vision fund on the cap table right now. I think externally people always say that, oh, that means that we have to grow crazily, right? Literally grow 10 times year on year and stuff like that. And I always say that to the new sovereign funds that are investors now as a company, I always say that, look, that is not necessarily the case, right? Because at the end of the day, what you see in the market and what you hear in the market is quite different from how they really operate. And I must say that our shareholders are pretty reasonable bunch of people. I think that's the first thing I would say. Second thing I would say is that at the end of the day, I strongly believe in growing responsibly, right? So growing responsibly means, not going out burning cash of monies and then, just growing at all costs and stuff like that. Sometimes when it means like hurting competition or even, hurting your own P&L, so to speak, your P&L are typically pretty bad looking if you try to grow at all cost, literally, right? And then so as a result, sometimes it's better to just grow fast enough, which in this case 200-300% year on year. And I think they just stop down there, right? And then you just bring yourself up for the next scale in the following year. So at the end of it, I would just summarize by saying that there is a balance, and really it is about growing responsibly and not like spurt of growth in that sense. That kind of numbers basically shows that you have very little control of your overall business. And in that situation, and given my past experience, having the fact that I've seen through 5 or 6 IPOs in my previous life, I feel that it's not the right way to grow a business, right? So it's steady, stable growth. And then over time, if your end in mind is an IPO, I think that's the right way to do it. Good visibility to numbers, extremely important. Stable growth, responsibly, super important.
Yeah, grow responsibly. That's a very interesting concept. And my next question is actually connected. So like other speakers can also connect to the previous question. How important is to constantly set parameters to measure your performance during the hypergrowth phase? Rob or Danny, please.
Yeah, I'll start. I'm sure Danny would want to comment on it too. My sense is it's critical. First of all, I love the phrase when people say, what doesn't get measured doesn't get done, right? So it is all about setting key, KPIs that I think everyone can understand in the organization and that are really well aligned with the interests of your investors, the interests of your business partners, the interests of your customers. And anytime you serve just one of those groups, if you're only here for what makes sense for the investors, you're not going to win. If you're only here for what's going to make sense for the customers, you're not going to win. You have to find the equation that will work for everyone, because I think exactly as Aaron said earlier, I can do lots of volume, but create no value. This is not about creating a business that won't have value. And by the way, creating value is good for your customers, because they will count on you to be an ongoing business. And in order for you to be around for a long time, to withstand the test of time, you've got to be able to have the discipline to generate a reasonable return. And so I think for sure, setting and resetting and measuring and remeasuring and reporting on KPIs is on the critical path, and it's got to be at the very top of the prioritization list.
Danny, would you like to add something here?
Yeah, so I think just a comment on the previous question, yeah, in terms of how has my time changed since gotten unicorn status. I think I've always been a very entrepreneurial CEO, very hands-on with product development, business, finance, IT, etc. Right? So I think the last 3-4 months it has been very interesting, because certainly I need to evolve and be different, because I know I actually cannot be as hands-on as I used to be. So that's because we're about to be public listed. There's a lot more strategic things I need to do in terms of SEC filings, with the lawyers, with the bankers, with external investors, and certainly I think people-wise, I think now we have about 700 to 800 people globally, right? So I think 20-30% of the time is actually spent on people operations in terms of recruitment for senior leadership individuals that can actually take up some of my roles, because now my role is going to be focused again, public markets, M&A strategy in the long term, to ensure that we continue to grow. And like Aaron and Rob said, grow in a responsible way where, again, we're growing, but we're not actually burning that much money and capital, right? So I think that's just a comment from the earliest question.
Right, I'm going to share a few numbers. So according to research from CB Insights, currently there are like 832 unicorns globally, and 198 of them are in the Asia Pacific region. Yet the odds of becoming a unicorn today, it's about like 1.28%. So you made it. And to recap, what do you think are like 3 main ingredients, or more than ingredients or secrets? What are like 3 practices that you have adopted to be part of that 1.28%?
I'll start with that and say that maybe at the key center point of what I think about is creating an organization that enables other companies. So a lot of times people ask me, what are you disrupting, and who are your key competitors? And I love to turn that around, and I love to say to people, what we really are is we're an enabler. And therefore, we're actually the potential partner of everyone. We're a potential partner for insurance companies. We're a potential partner for non-insurance companies that want to sell and distribute insurance product. We're a potential partner for insurtechs who want to compete against the established players. And we are a potential partner for the established players who want to defend off the insurtechs. So we are all of those things. But what is key for us is that we want to be the rails on which the industry is built, and then let the trains get built on those rails. So to me, that's been ingredient number 1. The second element of it is you really have to get to a place where you can achieve some sort of scale. If you don't achieve scale, then I think it's very hard for people to get interest in you. So, our co-panelists here have each had great success in growing fast and showing that they're capable of creating scale. And I think that that's on the critical path. And then I think the third item that I would highlight is you really have to have a crystal clear path to going into the world of profitability. No investor is ever going to want to invest in you without having a view toward when will this become a sustainable business that's not just simply out there burning cash. And so to me, we've had to balance those 3 elements, I think, pretty well, but that's what we focused on.
Thank you, Rob. Aaron, I think you want to add something at this point, please.
No, I mean, all I can say is I fully agree with what Rob said. In fact, the first thing that came to my mind was basically what Rob said about being I think, let me translate what he just said, right? Enable another company. I'm just taking notes here, thanks to Rob. But the way I think about life is about being a platform by itself, right? So we like to think of ourselves really being a platform that enables the other businesses as well, right? But since I come up with three things by itself, I think what's very important and what has driven us to this stage as well is, other than the fact that being a platform is super important as well. I think being numbers driven, being data driven by itself is actually extremely critical, right? Because if you think about our business specifically, or even in Rob's business, or even in Danny's businesses, all said and done, there's like 1,000 other insurance companies, that have done that has been running insurance businesses for like decades. But none of them, have done this at the speed or the scale that Rob has done in a relatively short span of time, right? But what really has changed really is the fact that we are a lot more numbers driven, right? We literally see through all the numbers, and then we just try to optimize each and every step of the way and digitalize it and automate it. I think that really is key when it comes towards creating a $1 billion company that is it's really a tech unicorn, so to speak, right? It's very different running an F&B business and stuff like that, but specifically tech business, being data driven, extremely important, right? Number two, I think that at the end of the day, it goes back to what we said earlier on, which is you have to solve a problem, and the problem needs to be in a large addressable market by itself, right? Say, for instance, again, you are running a hotel and stuff like that, but really, are you solving a problem? Number one, yes, you are solving a problem, but is it scalable easily and stuff? That's a whole separate question altogether, right? Going back to what Rob said about scalability and stuff like that. And the last thing I would say is, being able to fundraise is super critical, right? So, you have to be able to tell a good story, or for that matter, you should be a very good storyteller in the end. Because if you can be the damn bloody best in terms of tech, you can be the damn bloody best, in terms of anything like customer satisfaction, experience, etc., etc. But if at the end of the day, when you speak to the investor base, you butcher it, basically you cannot get a point across, you cannot sell a story and stuff like that. Everything comes to naught in that sense. So I think I would think are three things that would be quite critical for you to be a $1 billion company, so to speak. Being able to tell a story.
Thank you. I'm going to play a little bit with the numbers again. It seems like there is also like a unicorns boom recently. Like only in a total of like 136 startups achieved the unicorn status in Q2 of 2021 alone. That's more than in all 2020. And back in 2013, when the term unicorn was coined, there were only like 13 unicorns. So today, collectively, unicorns are worth nearly USD 3 trillion. Do you think there is a risk that we might reach like a sort of bubble territory? Maybe Danny, you can start, and then please, Danny, go ahead.
Yeah, I mean, at least from what I've seen, I think the companies that are unicorn status are very different than, let's say, a decade ago or from the .com era wise, right? Because I think the companies today, they have solid business, they have solid revenues, and certainly they're not actually burning as much cash, right? So certainly, at least from what I see in the market today wise, I think we're just getting started. So I think the exciting thing for us is, again, I think while we're building our company, I think we can actually grow significantly greater in the next 5 years to potentially be a decacorn company, right? And the only reason I put that status is that shows the potential impact in terms of opportunity for healthcare across the globe.
And I second whatever Danny said, right? And I think more importantly, coming back to your question directly, I actually feel that we are at the start of this whole cycle for APAC. You mentioned like 180 of them are in APAC. I can assure you, within the next year or two itself, right, you will see maybe the number even doubling. Because I am seeing that many new companies, I'm seeing that many new deserving companies, and I still enjoy invest quite a bit in companies. And I feel that what is happening right now in the market is that the capital is sort of like, I would say, cheap. Is quite readily available across Southeast Asia in that sense. So given whatever that's happening in China, given certain public policies that they have, we are seeing a lot of capital coming out from the north down to south, or for that matter, even from the US down to Southeast Asia itself. So over the next few months to even a year, we will start seeing a lot more. I think the pace of acceleration of unicorns coming out will accelerate, right? And for that matter, I think there's no bubble right now because it's just at the start of this. We will be at bubble territory probably in a couple of years' time. But for now, we are just at the start, man. I think a lot more will come out.
What's the next stage? Both Carro and Prenetics are now preparing to go public, as you mentioned, within the next 1 or 2 years. So are public markets like the less risky way to exit, reward shareholders, and fund future growth for companies at your current stage? I remember a piece of data saying that for unicorn companies, going public is the preferred path by a ratio of 2 to 1. Or perhaps like right now, also like becoming a decacorn. It's a new gold standard for companies before exiting.
Yep. maybe I can take this quickly, when Rob can go chime in, right, accordingly. But I used to be in a venture fund for many years, and I can tell you this as a former VC, I actually do not like necessarily to be in the company post an IPO, because I think it's far easier from a founder standpoint, both from an investor standpoint. Actually, it is far easier if it's a trade sale. The issue comes with this: whereby you are a $1 billion company, the universe of buyers it shrinks significantly once you cross, say, a 200-300 mil kind of valuation size, right? So when you're small, M&A activities happens, and that's why you look at the United States as a market. The flurry of M&A activities just somehow is within that $200-300 million range. There's less than that, right? In that sense, and it's mostly around that. And then you very acquisitive companies, you have the SAPs, your Microsoft, your Apples, your Teslas of the world, all looking to buy companies in the United States and Israel and stuff like that. Whereas in Southeast Asia, you see less of this. Singtel does some of this when I was there in the past, but for the bulk of Southeast Asia, I think I would safely say that most conglomerates or corporates itself are not as acquisitive as companies itself. But I think this has more to do with the fact that the companies itself are too expensive to be built up, or for that matter to be bought up, right? So as a result, people then default into the exchange as a way to get out or to exit the business, so that the investors can get liquidity sooner rather than later, in that sense, as all funds have a 7 to 10 year lifespan, right? But that's what I would say on a high level. It's not so much that this is preferred, to be very honest, but my honest take is that our universe of buyers is very, very small, right? Once you cross $1 billion, not many companies will say, "Oh, I want to buy you for $1 billion in cash."
The one thing I would say for sure is that, probably true for all of our companies, capital is the fuel that is needed to make sure that you can really achieve your aspirations. And so, when I think about bolttech, we're a young company. We just launched bolttech officially in 2020. I moved to Asia from the US in 2018. So we're a baby. It just completed our Series A, but we do have our eyes turned toward what will be the next moves that we make, including where will our capital come from in the future. And I think that's always going to be on the mind of a founder. That's always going to be on the mind of all of the companies, because we have to have more of the fuel to make sure that the rocket ship can actually achieve its objectives. So whether that's as an IPO or whether it's a series of private rounds, I think that'll differ for each company. It'll differ under the circumstances, but for sure, I would be highly skeptical of anyone who said, "Well, I'll achieve unicorn status. I don't need additional capital, and my game is done there." I think for sure you'll see people using this as an early step, not as their final step.
I'm gonna take a few questions from the audience. So there is one that it says given the 80 to 90% failure rate for tech startups and less than the 1% probability of becoming a unicorn, is becoming a unicorn company the right measure for evaluating a startup success or not really?
I'll answer that. I think it really depends on the founder's mentality or what they aspire to do, right? There's nothing wrong with building a $20-30 million company, right? As long as that makes the founder happy. I think what you've seen this with Aaron or Rob and myself is that even though we're at the unicorn stage, we actually have more energy and more feel to get us to the next stage, right? 7 years ago when I started, there was no way we could be a unicorn, but now we're thinking, how do we grow 5 to 10x bigger, right? I'm not exiting from the company. We have to actually work harder even through this path. Right? But so it just really depends on what each individual's aspirations are and ambitions. What may be right for me may not be right for the other individual.
Yeah, I think, Danny, you said that perfectly. In the end, I'll simply say for the bolttech organization, we are nowhere near what our end destination is. And so that's therefore unicorn status is not our last step. But it's very possible, depending on where someone came from and what business they're in, and how they're serving whoever it is that they're out there trying to serve, they may achieve their objective at a much smaller size. So, but in the space that we're in, much larger than our current size is our aspiration.
I'm going to take another question from the audience. It's a quite light question, but I think it's still interesting. Do you believe luck plays an important part in your success?
Yes.
Yeah.
No questions.
Yes.
Yeah. And then also on that is that you have to create your own luck too, right? You have to be in the proper position to be able to capitalize on it. I mean, even for us, through COVID wise, right? When we started testing for COVID last March, we're doing 100 tests a day for the community. And earlier this year, we're doing 30,000 tests a day, right? So we've done over 6 million tests. But certainly we were able to be in the right position. We had the right infrastructure, right team in place. And then when that happened, then we're able to pivot, right?
Yeah, I think, again, Danny, exactly as you said, I forget the exact phrase, we've all heard it before, but basically, it's when preparation actually meets the opportunity that really this becomes possible. And so had we just been lucky, but not good at all, then that luck would be very short-lived and it would actually end in tears for many. So the whole story here has to be, you have to be with the right business model at the right time. And so there's no question that you could have a great business and have bad fortune and bad luck in terms of timing and not succeed. Just like on the other hand, you could have a really good business model and it just happens to be the perfect timing for that really good business model. And people might call that luck. So I think it's very reasonable to say there's always some element of luck. There's luck that I met my wife.
A bit of luck is always welcome, but
Yes.
preparation is essential, right? I think that's for every profession. Yeah. Okay, so going back to your future plan now that all unicorn companies and looking at the future. So Aaron, you mentioned this year that your company is preparing to go public in the US, right, within the next 1 or 2 years. This happened after the latest Series C round of USD 360 million led by SoftBank Vision 2. So how is that going? Would you mind sharing a few updates perhaps?
Yeah, sure. I mean, nothing much to share except the fact that, the company has been in PCAOB compliance, which in auditing speak means that, we are prepared from financial standpoint, as Danny would know. So PCAOB is just basically a higher standards of IFRS in that sense. So I think that's where we are right now as a company. I think for that matter, I'm pretty sure that we'll be able to hit our numbers. 2 to 3 times growth year on year is given the fact that it's end of the year now. So I think broadly that's where we are right now as an organization, right? But I think at the end of the day, it is still really market dependent, right? So is market good enough to get out? That's one big part of it. And then number two internally, I need to have stronger visibility to numbers. I'm not going to list the company until such time that I feel that we have good visibility to numbers. Visibility meaning I need to be able to know without shadow of a doubt that I'll be within 10% of hitting my Q1, Q2, Q3, Q4 numbers and stuff. And that is super important whenever you want to list a company in that sense, because you never want to miss your earnings as a public company. And the moment you do that, even for a quarter, your share price is going to tank. And you're going to be fighting fires every day because you're going to be dealing with public investors and people shorting your shares, stuff like that. And it's not a very nice sin. And so anyway, come back to this. I think for us, I would still say that we are still in the process of preparation. I wouldn't dare say that we're anywhere near being able to list a company tomorrow if I like. But I do think that we are ready. Just that we need to be more ready for the eventual listing, hopefully sometime in next year.
Well, blank check mergers with special purpose acquisition companies or SPACs are also becoming very popular recently. And Danny, Prenetics is completing a SPAC deal with Artisan Acquisition. It's expected to value the combined entity at about $1.7 billion. And also with the intention to go public next year, I believe. So how is that going?
Yeah, so I mean, certainly, so we made the announcement officially on September 16th. On September 30th, we filed officially with the SEC in terms of our F4 filing. So certainly we've gotten back comments already from the SEC. So we're working through. So we believe, given where we're at in the progress-wise, I think we should be officially de-SPAC by basically early Q1 2022.
All right, and going public, is it going to be also next year?
Sorry, what was that?
The intention is to also go public by next year, right?
By Q1, yeah, so in the next few
By
months.
Q1. Q1.
Correct, yes.
All right. It's coming soon, huh? All right. Thank you. And as for bolttech, Rob, your company recently raised $210. So what are you going to do with these new funds, and what are some of your upcoming plans?
Yeah. Without a doubt, we have a leadership position today, and we want to continue to invest in the technology to extend the leadership position. So continue to make our capabilities better and continue to make our reach even broader. So we spend our money in acquiring licenses so that we can operate in a compliant way with all the regulators around the world. As you know, insurance is a very highly regulated business, and operating insurance in Asia is no small task. It's why I live in Singapore, and quite proudly want to be very close to where the action really happens, because we've got to make sure that the regulators feel confident that we follow the rules. And so we spend our money on the licenses, we spend our money on the technology, and we really are focused on trying to make sure that the leadership position that we have today is protected, and that if anything, we are moving faster than our fast-moving peers in the marketplace who would love to be in the same position as bolttech sometime in the future.
Thanks. All right. I think we still have like 5 minutes. So as we're wrapping up, and as a sort of recap, what's one piece of advice that you have for founders out there, aspiring founders, people that are listening, that are perhaps like building their companies from scratch? So maybe one piece of advice, each of you, for those aspiring founders there.
And I just have like 3 words for this piece. Now, going on back on the human side, in terms of certainly from my entrepreneur career, I think there's 3 key pieces that you have to have passion for what you do. Because at the end of the day, you have to have a reason to do it. Your team, yourself, you have the passion what you do. You also have to have lots of resilience, yeah? Because a lot of times you may want to give up, your team may want to give up, and through the pathwise, you still have to go back to passion. And then last thing is also having a very strong sense of humility, because at different stages of the company-wise, again, there could be a lot of people wanting to meet you, et cetera, but having that humility, you always want to maintain that hungriness, yeah? And that, hey, we're still, while we're at this certain stage-wise, we can still do so much more. So those would be my key elements there.
Thank you, Danny. Aaron?
For me, I mean, I would less than advice, but I would always think my personal philosophy, always as an investor anyway, is like 1% of a watermelon is better than 100% of a grape. I haven't really done the volume analysis in my life before, but you get the point of this, right? I think it goes back to a few of these things that Rob and Danny mentioned, right? Really, at the end of the day, it is not so much the valuation and whatnot that you are getting. Luck could play a part in all these things that we do, all said and done. But at the end of the day, if even if you don't have a unicorn, right, or a decacorn for that matter, but you own 100% of $100 million, $50 million business, you actually sometimes, and a lot of times, you are probably better off than someone who is there somewhere. I mean, who actually owns like maybe a small portion of the overall business, right? But either way, I think all said and done, really, it really depends on how you negotiate and stuff like that. But yeah, so I think it really depends on the personal philosophy in that sense. But again, I stand by the very fact that it's sometimes better to own 100% of 1% of watermelon than 100% of a grape, so to speak.
Thank you, Rob.
So I'm from Philadelphia, Pennsylvania, and sometimes we'll be known to make up words. So excuse me here for these words not being exactly correct in the dictionary. But I would say I have to focus on, I would recommend people focus on the illities and the uities. Be ready to focus on the fact that you've got to have great adaptability, great flexibility. You've got to be able to deal with great ambiguity, because the path will not be clear. As a matter of fact, you've got to make the path clear. But the word that's really made up is, I think you've got to have great learnability. The people who will succeed are the ones who have the ability to be nonstop learners. You must be a lifelong learner and be willing to learn lessons that you never dreamed that you'd have to get exposed to. And Again, you focus on that flexibility, that adaptability, the ambiguity, and the learnability. And to me, combined with the comments that Danny and Aaron have made, I think you'd be a really good recipe for success.
And if in case you fail the first time, that's also okay, right? You can always try one more time.
Without a doubt.
That's also like many founders as you, or like many founders out there, you know, like perhaps the first time is not the best one, or perhaps it's as you mentioned, like it's a lot of learnings, right? I feel like one of the keys is to always learn on the process to like get better and little by little, right? Rob?
Right. Exactly. I was going to say, I think that you have to have that ability to recognize that you're not always going to succeed first. This is not the first thing I've ever done. It's not the first thing Aaron's ever done, not the first thing Denny's ever done. We've done things, and not everything has at first been the same level of success. And it's what you make of it.
Yes. Maybe a last word. We still have 40 seconds. A last idea from Aaron and Danny as we close this. Thank you.